Good morning, and thanks for tuning in to the Deal Maker, area's #1 show for mortgage and real estate.
So I think really the first step is kind of understanding your credit and kind of getting into the credit side of things. So with credit, obviously, I don't think it's not a one size fits all. We do a lot of credit analysis, credit review for our clients, and a lot of times we'll get, questions that, very generic questions that, maybe they saw something online and it's not just quite right. Maybe I've got 10 different credit accounts and, I maybe overlooked a payment because I used my Macy's card and to go buy some clothes to get 30% off, and I don't typically use that card, and maybe I forgot about it. So I had a missed payment, but I have 10 accounts with a long, clean credit history. So, and then you take the person B with maybe just 1 or 2 accounts that haven't been open for very long, and they have the same situation, they miss a payment. Well, it's going to affect them a great deal more than it's going to affect me, which just goes to say that, every credit report is very specific to each individual. One size does not fit all. And so when looking at your credit, I love Credit Karma. I actually encourage my clients to go on creditkarma.com and kind of, check it out and kind of get just a kind of a baseline of what information is on their credit report. But I think that also breeds a lot of misinformation, so which we have to coach our clients on, and that is, Credit Karma is going to be about 20 to 40 points different than a mortgage credit score. Reason being is just, again, it's just a credit scoring formula, an algorithm, which is why credit scores are not one size fits all. But whether you're bad credit, good credit, great credit, I think it's important that you reach out to a professional to get a full review of your credit when you're just starting the process. And you can do that anytime by giving us a call at the Deal Maker Show, 704-999-6646. We do have Taylor Moore, first-time home buyer specialist, in studio with us. Taylor, what are your clients kind of thinking about credit? When they first make contact you, typically they're contacting you before any lender. Do you ask any of those questions about credit? What do they think about credit?
So I always recommend they talk to a lender first, because the lender's going to have that information readily accessible, and they can speak more to their credit. A lot of first-time home buyers don't want to have their credit pulled because it's, my credit's going to be affected if I have my credit pulled. So I just always recommend that they talk to a lender about it and get that going with them, because ultimately the lender's going to have to help you. You have to get your credit pulled in order to get pre-qualified, pre-approved for a loan, get the loan. So I always just tell them it's okay. Talk to the lender first.
And I think it's one of those bits of misinformation that's out there. People go online again and just try to get specific information online, but they're just getting very general information online, and so I do encounter that a good bit. Well, I don't want you to pull my credit. It's going to hurt my scores, and then we talk through that and coach the client through that as far as what credit inquiries actually do to your report, and kind of what we do from a personal standpoint is providing that full credit analysis and review. And when we see where there's room for improvement, we're going to give you that information. We'll tell you what to do, how to do it, what will happen when you do it. And again, it's for anyone and everyone. So if you've got a 500 credit score, we're still going to put a credit game plan together for you. Maybe you're at a 735 credit score, but getting to a 740 is going to give you a slightly better interest rate. We'll give you that information too. So it's really no downside. When you call someone who really knows what they're doing on the credit side to get that information, you're not going to really see any drops in your credit score.
Right, and it's important to know, well, my credit's not where it needs to be to get that loan, so we need to take 6 months and back off of our search and save up and do those things that the lender or the credit counselor is telling you to do to improve your credit score. So it's really important to know going in. So it's okay to have your credit pool to get a game plan.
Absolutely, yeah. I think that's the most important part is, putting the game plan together, because, you and I, we do this for a living, and there's still a lot of, what if scenarios out there for people that, don't do this on a daily basis. It's just so much information, so much misinformation, which is all the reason why to work with a team of professionals who have your best interest, and who are generally interested in making sure that you're well taken care of, which Taylor does so very well. I don't like to think I do okay as well.